It would be nice if I actually knew how to actually run my own podcast, right? After all this time, but clearly I don't. Anyways, welcome to the Common Sense Show and welcome back. I am excited for this podcast. I'm excited for every podcast I do. So I say that every single time. Maybe it's because I don't have a better intro, but the point is that I'm excited about this one because who doesn't like taxes? That's a joke. Everyone hates taxes. But here's the thing. We are at the end of 2023. And if you're a small business owner, like I'm assuming most of you are who listen to this podcast, in 15 countries and 40 US states, then you realize that this is the time of the year where taxes take on the most important part of your life. Some of you have done some tax preparing already, some tax planning from last year, so you're not necessarily all nauseous yet. Some of you will become nauseous and need to lay down in a dark room in about a couple of months, while others of you will be oblivious until the IRS sends you a letter. But today I have Alexis Gallati with me, who is a tax specialist. She has an interesting firm. We're going to learn more about that. She's going to help talk to us about tax planning. She has a company that she calls Cerebral Tax, and I think that from my perspective, it's interesting hearing about a company actually named Cerebral Tax. She's into that. So we're gonna get her to introduce the concept and how she actually develops her tax strategy for small business owners and medical professionals as well. So I'm going to welcome Alexis to the show when we're just gonna do a little switcheroo here, and then we'll get right into the end. Alexis, welcome to the Common Sense Show.
Thank you, Micah. It's so nice to meet you and excited to be here as well.
Awesome. So you are the founder and the lead tax strategist at Cerebral Tax Advisors. And you created something called the Cerebral Wealth Academy, which I found actually pretty interesting. Can you tell us about your tax advisory and tell us quickly about your academy and what made you kind of start that?
Yeah, definitely. So I started Cerebral Tax Advisors in 2014 as really a way for me to obviously do taxes for clients and taxpayers, but also too because there were the Warren Buffetts and the Bill Gates of the world, having this low tax bracket, and I want to know, how can I get there? And, as myself being a business owner, my husband also owns a practice, and, what could we be doing to help lower our tax liability? And so that really sent me on this journey to learn all the different tax strategies. And so when I built Cerebral Tax Advisors, I really wanted it to be more of a white glove hand-holding type of service for our clients. We're small, that's on purpose. And we work with those that will have 1099 income, as either, doing side gigs, or they have like their own business, etc. So the Wealth Academy came about for those that didn't like to do didn't want to have a white glove hand-holding type of service. They wanted to do it themselves. And so that course really allows them to, choose an entity, look at retirement, look at deductions and credits, and give some case studies and templates and resources, et cetera, that allows you to basically implement these things themselves. And so I'm very big on education. And so like at Cerebral Tax Advisors, we don't sell any products. We don't take any commissions or kickbacks. A lot of it is around educating our clients, and just so that they know about the different strategies out there, particularly around owning businesses, and also having wanting to do more investment type things like real estate or oil and gas or things like that.
Awesome. And so obviously this is the time of year where high earners, people who are small business owners, are worried about what their tax bill is going to look like. And again, like I mentioned, because I always felt this way, is that it always makes you kind of nauseous around this time of the year. I always say like when the Celtics lost the 2009 9 or 10 championship to the LA Lakers, and Kevin Garnett was interviewed about what happened afterwards. He said that he had to sit in a dark room for like a week to try to like recover. And so that's what it's like when you have to write a check to the IRS. In my opinion, you have to kind of sit in a dark room and contemplate your life for a week, because it really is gut wrenching to write that big fat check. But so tell me, okay, so part of what you talk about is starting your business on the right side of IRS. What do you mean by that?
Yep. Basically, you want to know what the IRS is looking for and what they need in order to substantiate a deduction, or even just starting the entity correctly. So what I'm always focused on is making sure that things are being done properly and that documentation is done properly. You're saving receipts, etc. And you are just setting up things in such a way that if the IRS were to take a look at it, then you know you're going to be in good shape. It helps relieve the anxiety of well, I should say all my clients freak out when they get when they get a letter, but we say, hey, send it to us because that's part of what we cover in our monthly fees. Send it to us. We'll help you take care of it, etc. But we want them to know that we're setting them up in such a way that even if that letter does come, they know that, hey, Alexis and her team have set me up properly.
What is it that small business owners and independent contractors, freelancers, what is it that they get wrong about taxes that you see the most?
Yeah, probably one of the number one things that the IRS likes to nab business owners on is the commingling of personal and business funds. So, if you go out and you purchase, I don't know, let's say printer paper from Staples, and whoops, I, used my business credit card, my personal credit card instead of the business credit card. Well, you can easily go and get that reimbursed. But sometimes we have clients that will come to us and they are using their business account as a personal piggy bank. And it makes your bookkeeping so much messier. It makes it difficult for the IRS to know, like, okay, is this really a legitimate business deduction or is it a personal expense? So making sure you keep your business and personal funds separate by having a separate checking account, separate credit card, makes it a lot more legitimate business wise.
There's been so many changes in the last few years to not necessarily the tax code, because I feel like that is ever expanding like the universe, but to the nuances stemming from COVID. There's so, the what is it? The American tax, and I can never get the names, these mnemonics right for these tax plans. But the Tax Rescue Act of like 2021, the one when Trump was in office. Like, there's been so many different COVID packages out there that are like affecting businesses even now in 2023, and will continue to beyond. And I just heard that the ERC, the tax ERC payment, the IRS has halted payments to businesses for that. Is that true?
Yes. So yes, they are doing a lot of searching into the ERC, they said that employee retention credit, because there are so many like ERC mills out there that are just contacting people and saying, hey, you're qualifying for this. But when a lot of times people aren't qualifying, so they're filing false claims. And then the thing is that the IRS is obviously overwhelmed with all these. And so they don't have the capacity to look at them on a timely basis. And so then those funds are sent out, but then, it's determined, well, actually you don't qualify, and then you'll owe interest and penalties on it. So it's really important to work with a reputable tax advisor as opposed to some of these ERC mills, because they're just looking to get a piece of that pie.
Yeah, I get, and I get an ERC email like every other day, and I
get text.
Do you?
I do. Yeah, they're pretty relentless. I get them at least a few times a week.
It's ridiculous. Like LinkedIn, email, and then I've already gotten it. So I can't get it again. So they keep sending me. You would think that they would have a list, but you're right. Like these firms are just kind of going back to the well again and again and again. and then I'm sure they just shut down and move on, and the government can't find them after that because they pretty much suck, and they're preying
Yeah,
on people as well. So, um,
exactly.
so okay. So you also talk about how you can unlock substantial tax savings with retirement. Are you just talking like the simple investment in a Roth IRA or a traditional IRA or 401k, 403b, or are you talking about something a little bit more nuanced, something that we haven't heard before? What's your strategy?
Yeah. So, well, I educate my clients on all the different types of retirement plans because there isn't always one fit solution. It really depends on if, you're a solopreneur or if you have employees. I mean, that makes a big difference. So yeah, my go-tos are the 401k, usually 401k with profit sharing plan. So you can max that out, as well as I love the defined benefit plans. So like a cash balance plan. And what's great about the cash balance plan is that you're really able to put away so much more money into it than you would with a defined contribution plan like a SEP IRA or a 401k.
Mm-hmm.
And one of the main reasons why I like those as well is because, like with a SEP IRA, you're not allowed to do a backdoor Roth if you are over the income limits. So you got to remember that you can still do your direct IRA, your individual IRA, your pre-tax, as well as your Roth Roth IRA account, along with your business plans as well. So I always like to think of it as it's an individual account. So that's you as the individual, where the 401k or the cash balance plan, those are employer accounts, and you're allowed to do both of them at the same time.
Yeah, so there's been a lot of recent news about the fact that 401k balances are always going to change, and of course they're going to change with the economy and how well the market is doing. But hardship withdrawals I found to be a very interesting topic of conversation, and hardship withdrawals are up. And actually, you know what? Let me just show you the CNBC article. That I was looking at the other day. I think you might find this interesting. So here it is. Once I show it to you, there it is. Okay. All right. So here it's talking about how, let me go down to the section about hardships. Okay. So let's see this. Okay. So Bank of America's recent participant pulse report shows that the number of 401k plans participants taking hardship withdrawals are up 13% from the quarter and 27% compared with the first quarter of the year, with the average withdrawal amount just over $5,000. And of course, we also know that we're living in a massive credit crunch time in recorded history right now, something like $1 trillion in credit card debt at the moment Americans are in. What do you think is contributing to this massive 401k hardship withdrawal, just explosion that's going on right now?
Well, the economy, prices are up. People are not necessarily getting the pay increases that correspond with the increased inflation. And so, yeah, it's, and sometimes people just also live beyond their means as well. And, so it's kind of a, perfect storm of all these different factors.
Yeah, no, I just found it interesting that, and you're starting to see more on social media where people are just kind of, frankly, just coming out and talking about how hard it is for them to live, grocery shopping, pay their rent, dipping into savings, like life in general is getting hard. So let's get back to business real quick. So you also talk about 5 simple changes that you can make to your business in order to save tax and grow wealth. Now, only 5, or are these the 5 most important ones? And why are these 5 changes that you can make to your business so important? And what the heck are they?
Yeah, I choose 5 just because these are the ones that are easy enough to implement and that people can really do right away. I mean, we're obviously very limited in time being on the 21st, but there's still be some things that you could do. Like with retirement, for example, there's still opportunity even after year end to start a plan and implement it for 2023. So retirement is always a low hanging fruit, and it's great for increasing your wealth and as well as saving tax. One of my other favorite strategies is hiring your kids. If you have, you're obviously supporting your kids. If they can have a legitimate job in your business and you pay them like employees, then that's an easy way to shift income from your higher tax bracket to their non-existent tax bracket. If you want to keep their income underneath basically the standard deduction amount, which for 2023, that's $13,850. Now, right. The court tested age is 7. And so you can do younger than that, but I recommend just waiting until your child's 7. And you can even do this with parents as well. And, if you have a parent that you support, you can hire them through the business if they have a legitimate job in your business, and then you're able to write off their support. You just have to be careful. Yeah.
I want to nail down on that for a second, because what exactly defines support to a parent? I always wanted to know that. The obvious ones are that you have a parent who can't take care of themselves. But is there something, is it just your mother retired and now she's living with you kind of deal? How does the IRS in your experience define support for a parent?
Sure. So it can be what you mentioned first, where, I have some clients that will send their parents $1,000 a month just to help out with their normal living expenses. Right. And then there'll be others that do live with them, and they're, paying for their food and, helping with the clothing and everything else. So it's more about, you need to make sure that they have a legitimate role in your business, like maybe doing bookkeeping or some admin work, or, just depending upon your type of business, there's something that they could end up doing. And so that's the most important thing, is just making sure that they're legitimate, just like with your children, legitimate employees, and you treat them that way. They have timesheets, the money goes into their accounts, etc.
Okay. All right. Sorry, I interrupted you while you were hitting
that's a great park. Yeah. No, that's a great question. I also love office in the home as well. There's so many people that read about, isn't that big audit red flag? Not if it's done properly and it's a legitimate business deduction. I always find that discussion or argument so funny, because technically the IRS can deny a charitable deduction as well if you don't have the proper documentation. So same thing with the home office. If you're able to, if you use your home and it's used exclusively, that part of your home is used exclusively for business, and you do the proper paperwork and you do everything, then you're able to write off a nice little portion of your home expenses, and that includes utilities, mortgage interest, or rent, property taxes, etc. So it can add up to be quite a bit. And once
Go ahead.
No, go ahead.
Yeah, when we renovated, I made an office here, obviously exclusively for business, which is helpful because I know exactly what the square footage is of the office, and it obviously is for business, so you can kind of prove it. But let me ask you a question about this one, because this one is interesting to me. So you can take a simple deduction for an office space, which is a flat rate, essentially a flat rate deduction, multiplied by your square footage, and then they give you the IRS deducted amount. Is that so? This appears to me to be like should I choose mileage, right, or gas and repairs to write off my car, right? And so you might think that 65 cents a mile is nothing, but when you drive 20,000 miles a year, it becomes 65% of all the miles that you've driven, right? So it actually becomes something a lot bigger. It's a massive deduction, and that ends up being a lot more than your $2,000 repair and $5,000 in gas. Is it the reverse with the home office deduction? Would you advise to take the simple office deduction or the percentage of the entire home?
It depends. You have to look at it both ways, and same thing with the mileage deduction as well. In my experience, I've found that the actual expenses, even if only taken a certain percentage, would end up being more than the standard amount. Because also too, unlike the mileage deduction, with the standard home office deduction, it's limited to 300 square feet.
Mhm.
So that's only $1,500. And most people, when it comes to, their rent or their mortgage interest, property taxes, utilities, etc., will most likely be able to do more in the actual expenses than the standard. So you want to look at it both ways come tax time and just see which one is a bigger benefit.
Yeah. Yeah, that makes sense. And I think I probably need to do that next year, because I think last time I did it, it ended up being like I don't know, I have 110 square foot office, so it's not that big. But it's but the deduction, I was like, it was like way off based off of what I thought it should be. And I forget the calculation for it, but I think it's a percentage of the total space, and then however much you pay. But okay, again, my curiosity is getting the best of me. Go ahead. You have one more way that businesses can implement tax savings now.
Yeah. So I'm sure you probably heard it, and maybe this is a TikTok you've seen or something like that, is the Augusta rule, or renting your home to your business. It's also known as the 14-day rental rule. And so this is basically where you rent your primary residence to your business for 14 days or less. It does not have to be consecutive days. And your business gets a rental deduction, and you as the individual do not have to pay tax on that income. So this originated in Augusta, Georgia, where we have the Masters, and and actually some clients that do this, they rent their home during that 2-week period, and they get like $30,000-$40,000 for that 2-week period, and they don't have to pay tax on that rental income. So you can even do the same thing for your business and rent your home to your business. You just have to make sure that you've structured it properly, and that you have a reasonable rental rate.
Do you have to own the property? Can you sublease it to your business if you're renting
So
already?
yeah, it has to be your primary residence. So if you're even if you're renting your home, you can use it as well.
Oh, okay. Interesting. Yeah, I have heard of the Augusta rule, not on TikTok. I actually read about it. And it's I've heard some wild things and some exorbitant rental rates that people have charged their companies for that, which means it's like one of those things where it's like you eat a slice of the cake and it's so good that you end up eating the whole thing.
Yeah, they get a little greedy.
Yeah, causing trouble for everybody else that's kind of involved in it. So you also kind of specialize your focus with healthcare professionals, specifically physicians. Um, is it your husband's job as a doctor that drew you into working with physicians? I know that you mentioned you got into tax because you wanted to just, you know, try to figure out more tax benefits for the family. But what was it that got you to work specifically with physicians versus other occupations?
Yeah. So yeah, with healthcare professionals, it was kind of happened organically because of the circles that my husband and I hung out in. And since we have a lot of the same experiences that community has, it was a natural fit, and to work with that industry. Although we do have some other, but 95% of our clients are healthcare professionals. We do have about 5% that are in other businesses. Like we have one that's a big YouTuber out in California. We have a big janitorial business in Texas, and even a lighting and design firm and marketing firm, etc. So a lot of the same strategies that healthcare professionals use can be used by any businesses. The only difference is that some of them are just in higher brackets. So you start to get phased out of a lot of different strategies at the lower levels.
Interesting. Okay. All right. So one of the tax strategies that people like to use, we kind of touched on real estate and the Augusta rule, kind of using um, using you're renting it back to your business. But in terms of real estate investing, and using that and the depreciation and some of the benefits that come with it, this is a very popular methodology of tax savings for high net worth individuals. People just say, dump it into real estate. And dump it into real estate is not something you kind of want to hear because it's very, I don't know, it sounds stupid when you put it that way. But like, can you frame it in a way that's a little smarter than just dump it into real estate? Is it worth the salt? Should a high net worth individual actually do that?
It depends on your goals. Not all real estate is created equal. So you can either do long-term rentals, you can do short-term rentals, real estate syndications. And so between those, you just have to understand how they're being taxed. So with like long-term rentals and real estate syndications, and if you're not sure what, do you want me to explain what a real estate syndication is?
I know what it is, but you should explain it for people who are watching. Yes.
Yeah. So real estate syndication is where you go into like a partnership and it maybe owns like a commercial building, like a strip mall or something. And so you just go in and you put the money in and you invest in it, and they run the strip mall basically. And usually by the end, you'll want them to sell it, and you get a nice little payoff after they sell it. So you got to remember with long-term rentals and real estate syndications, it's considered passive income, which basically means you're not participating in it. You're just the money, basically. And so any sort of losses that occur from it, you can't write it off unless you I think it's you're under $150,000, and you can write off up to $25,000. But in general, you can't write it off. And so those losses are suspended until you either have passive income you can put against it, or you sell the property. Now there are exceptions. So like if you can obtain real estate professional status, then, you're able to then change that from being passive losses to active losses. And then those losses can be used against like your W-2 income, or your business income. And then there's also short-term rentals, which there's the short-term rental loophole, where basically as long as you spend 100 hours a year on that property and you spend the most time than anybody else on that property, then any sort of losses that occur through that business, you can use again through that rental can be used against your ordinary income. So like I said, your W-2 income and, income from your business. So you want to try to fit into some of these categories, so then that way you can take advantage of any losses that occur. I mean, obviously you're going to want to have, you're at least on paper, you want it to be a cash flow positive. You don't want to just have an investment, is losing you money. But you're really looking at, wanting an asset that's going to appreciate in value. So then maybe later on you can sell it for a gain. But the depreciation, so you being able to write off a part of that home that you've purchased, that rental, allows you to eliminate a lot of that rental income. And you can even do things like cost segregation studies to help accelerate that depreciation and really take a lot off of your taxes in a year. If you either have that short-term rental loophole, or you're able to qualify for real estate professional status.
How do you qualify for real estate professional status?
Yeah, so in general, you need to work at least 750 hours doing real estate activities. And so that means you're going and helping, repair things, you're managing the property, you're interviewing tenants, etc. And you need to be doing real estate activities more than 50% of your time, your working time. So if you're like a full-time physician or you work at a full-time job, you're not going to be able to qualify for that. But if you have a spouse that's maybe not working or just works part-time, then your spouse could potentially qualify for that real estate professional status. And as long as you have enough rental properties that you can create that 750 hours, then you've really put yourself in a good spot.
Does a real estate license mitigate that requirement for that status, for that active working status?
It doesn't. So you don't have to have an actual realtor license to qualify for a real estate professional status. So you got to think about the rep status, as it's called, is more of a requirement with the IRS. Like it's different.
Sure. Yeah. Okay. So actively working in real estate management, and I'm not exactly sure how the IRS proves it. It seems like somebody was just like, "Oh yeah, you have to do 750 hours of real estate." It's kind of like one of those things.
You need to keep a log of your hours.
Oh, like a driving log that everyone's supposed to keep that nobody keeps when they're driving around.
Recommend for driving. I love this app. Like I wish I owned stock in this app because I sing its praises all the time. Is Mile IQ. It's an amazing app. Like I think there's other ones out there like it, but it like tracks you. Like it creates the log for you, so it makes it super easy.
Yeah, actually, I've seen Mile IQ. I think it's pretty cool. There's one called, is it Everlance as well? I think, and then like
sounds familiar.
You put in the addresses and then in the time that you're leaving, and then between that it calculates kind of how far you're going and stuff like that. But yeah, that's pretty cool. All right, well, it's time to react to TikToks. Your favorite thing to do today. I have just helped you launch the TikTok world. Are you on TikTok already, Alexis?
I am not. I am one of the old people that I'm not on TikTok at all.
Okay. All right. No, you're not old. But I'm going to let's see, 1, 2, 3. Let me just pull these up. Okay. And here's how it's gonna go. I'm gonna show you a TikTok. Have you seen these TikToks already?
I don't know. No, I don't think so.
Haven't seen. So your reaction. Some of them are going to be some advice from people. You're going to respond to it. Some of them are going to be silly, and you're going to respond to it as well. So let's get cracking.
Okay.
When I worked for the government, I made about 100.
Can you hear it?
Yes, I can hear it.
To $130,000 per year. I paid about $40,000 in taxes. But last year, I made about a little over $1 million on YouTube, right? And all the other entrepreneurial ventures. I paid $36,000 in taxes.
Wow, that's
the reason why is because business write-offs, depreciation, cost segregation, real estate. I bought 7 real estate properties that year. So I tell people this not to be like, look at me, I'm going to flex. Rather, if you spend your money intelligently, have a business, right? A service-based business or some kind of entrepreneurial venture, have real estate. It is probably the best way to hedge against inflation and also to cut your taxes down. When I worked for the government, I made about.
All right. So, truth or a lie? What do you think about that first one?
There could be truth in it. I mean, he's very vague, obviously.
Right.
But I mean, like we just kind of discussed, if you invest in real estate, there is the opportunity. Him buying 7 properties, depending on what type they are, if they're short term or if they're long term, et cetera. You can structure it that you can qualify for that real estate professional status. I mean, maybe, like I said, he has a spouse that can qualify for it, and he's doing other things, in his main business. So, there's definitely some truth to it. I would just need to dig deeper to see what he was actually doing.
All right. Yeah, fair enough. That makes sense to me. All right. Up next.
How do you owe so many taxes?
So when I do my tax form.
By the way, this was a individual that was interviewed on the podcast. This is going to be wild.
I usually put single and 9 dependents.
9 dependents?
Yeah, single and 5 dependents.
You got audited?
No, never got audited.
Are you single and do you have 5 dependents?
No.
How many dependents do you have?
None.
Okay, why? Why'd you say that?
I don't know. I feel like I work really hard for my money.
Yeah.
And just giving it to the government, it just really...
Nobody likes it.
But I never got audited, just got letters. Hey, you owe this kind of money. Yeah. I called the IRS. I made a deal with them, and I'm making monthly payments on them.
How do you owe so many?
Did this guy just admit to tax fraud on a podcast interview?
Yes, he did. Oh my. Oh my. That's all I have to say about that.
Yeah,
That's sort of cocky special, you know. Yeah, I mean that's just pure tax fraud. I mean,
don't do that ever,
that
people.
don't do that, please. Be truthful and make sure you're not taking dependents that somebody else is supposed to be taking. Like if you have a divorce agreement or anything like that, like you know, be honest because they will come after you.
All right, give the
Which
people a
is why they
finger
owe
wag.
so much money.
Give the
Yeah,
people a
they're
finger wag, Alexis. You gotta, yeah, don't do that, please.
yeah.
Terrible. All right, we have 2 more.
I literally just did my taxes and I owe money. I call my dad. I'm like, did I do this right? He's like, I don't know. Maybe you should pay someone to do your taxes for you. I said, does it sound like I'm in the position to be paying someone else to do my taxes when I already owe the government money? Oh my God. What is this scheme? God, are you there? It is me, Sarah. I hate being an adult.
Adulting at
is
its
tough.
worst.
Yeah, I remember this Facebook reel or it was on Instagram or something of this father sitting in the car with his 2 sons, and the son got his first paycheck, and he was like, "Where'd all my money go?" And he's like, "That's taxes," and it was like this whole thing. Like it was beautiful to show that that's the system. You know, it's heart-wrenching too, but yeah. I mean, it different people need different advisors. So probably in her case, she probably had just a W-2 sort of situation, and the turbo taxes, you know, and other H&R blocks and such of the world, being able to do it online, that's usually sufficient. It really is. And so she might just have not done her W-4 correctly to have enough withholding taken out. Right. So luckily for next year, she can, you know, adjust that if she needs to. But once your situation starts to get more complicated, like you own a business, it really does help to work with a tax professional. Just so even at first, like the first few years, you learn, get your bearings, you learn to make sure things are set up properly. And, you know, you're busy in your business, like let someone else help you with that. And if they're anything like how we operate, we're going to save you more in taxes than what you pay us. Otherwise, I don't feel it makes sense to work together.
Yeah, over the course of the years, I have saved. Putting the number on it is tough. I'm sure there is like hundreds of thousands, millions. Like just having somebody on your side who can actually help you out with your taxes. And I just remember, like going through the process when I first sought the advice when I started my business of a tax professional, and they told me how much it was, and I was so pissed. I mean, it's not like drop dead on the floor, like I can't believe I have to pay this kind of money, but like it's still compared to TurboTax, you know, it's you know, it's money, and so you're just sitting there like, oh, can I do this myself? I mean, but you're right, because having hired them consecutively over the years, you feel like you kind of get a CPA yourself. Like you really start to learn the differences and approaches to deductions, to tax planning, to how to structure your business, to which ways that you should push. And then what I've learned as I've changed accountants over the years and tax advisors is you learn to recognize people who don't know what they're talking about. And I think for a small business owner, for someone who is, you know, a medical professional, it can be costly and dangerous to engage someone who's ignorant about the tax code, about deductions, and you're playing with your money and your family's well-being. So I think it's really important to learn how to recognize a really good, you know, tax professional versus someone who you went to a 3-day over the week boot camp and got their tax preparer's license and call themselves something that they shouldn't call themselves, because we know that happens.
Yep, exactly.
I can only imagine if I were to ask you how many returns that you have had to correct over the years. I'm sure it's not pretty.
Countless.
Yeah.
I couldn't even tell you how many.
Exactly. All right. Time for the last TikTok. Let's get cracking on it.
Let's go. I just got my tax refund. $3,300, baby. That's not a good thing, man. What? Why not? A tax refund means that you overpaid your taxes throughout the year, and now you're getting that payment back. Still don't see how that's a bad thing. Well, now you have a windfall of cash, which most people don't spend wisely. Also, if you were having a hard time making ends meet, you could have had more per paycheck. All right, wise guy, what's the goal then? You want to make sure your W-4 is filled out with the correct withholdings, and you want to get your refund as close to zero as possible. Okay, I'll follow you. Let's go. I just got...
All right. So kind of echoes and shades of what you just talked about with the previous woman who had a hard time adulting. What do you think about this guy?
Yeah, he's absolutely right. Always the end goal is try to have zero taxes owed and zero taxes refunded back on your tax return, because that means you did everything right during the year. And even if you are employing tax strategies during the year to help lower your liability, then you want to adjust your withholdings at the same time. So then that way you're getting use of that money now instead of giving the IRS an interest-free loan.
Is there a way to for W-4 employees to be able to, or W-2 employees to be able to anticipate how to get to net zero in advance? Because, obviously you can claim zero, which still may not be enough to prevent you from owing. You could also contribute, if you're a W-2 employee, additional withholdings for taxes that help kind of fill the coffer as well. But what do you recommend for a W-2 employee to actually get to net zero if they're not exactly sure? And maybe they're a high net worth W-2 employee, but like, how do they get there?
Yeah, you want to usually working with a tax professional will help you to do tax projections. So that's one cornerstone of Cerebrals. We're very big on proactive planning. And so we do a mid-year projection with our clients and a year-end projection. And so that allows us to tweak and modify their situation as their situation changes or tax law changes. So I'm not 100% certain of like the consumer of softwares out there. I mean, I'm sure that like a TurboTax or an H&R Block would have some sort of feature in there that allows you to do projections. But yeah, ultimately you have to remember that when it comes to underpayment penalties, which if you don't pay enough tax, they can to give you an underpayment penalty for, you either want to pay 110%, 100% or 110% if your liability was over 150,000 of the prior year tax, or 90% of your estimated current year tax, whichever is less. And so that might give you the opportunity to go in, take some of that money and even put it in, like, let's say, hey, it looks like I am going to owe $5,000 on my tax return. Well, if you are not going to owe underpayment penalties, you might want to even actually hold on to that, put it in a high yield interest rate or account, and allow you to earn some money off of that, and then make that payment in April, on your tax return as well. So sometimes you can get sophisticated in playing with interest rates and only paying what you really need to owe at that time.
Estimated taxes are a great way to reduce that tax burden throughout the year if you want to pay like the quarterly taxes. And one of the things that I do that actually works well is quarterly my bookkeeper sends my P&L essentially to my tax individual, and they calculate it based off of the quarterly what I made per quarter, and you just send it in, and then you don't even have to think about it. You just do it, and if you kind of create a system for it, it actually works. The real trick is not spending the money for the taxes that you need to pay the IRS before it's actually due. So,
exactly.
Alexis, where can people find you if they want to learn more about you and if they want to learn more about Cerebral Tax Advisors?
Yeah, I actually created a page specifically for this page. It has some freebies on there, some year-end tax planning tips. So make sure that you kind of use a checklist, as well as a expense tracker as well that has some great for the office and the home and your vehicle as well. But if you go to www.cerebraltaxadvisors.com/common sense, so the name of the podcast,
Nice.
then you can go there, and there's also a link to my book, which is Advanced Tax Planning for Medical Professionals. It's even great for just those that aren't medical professionals as well. It's a real brain dump of a whole bunch of different strategies that allow you to just be educated on it. And
Look at this.
perfect.
You are watching this on YouTube or Instagram or X at the moment. cerebraltaxadvisors.com/common sense. You'll see my beautiful mug right there. And then there are the resources that Alexis is talking about. The link to this will be in the description for this. And I encourage you all to watch this video. It's very good. I saw it the other day on why Cerebral is different. So appreciate you giving the listener something to actually, glom onto as they're trying to prepare to not get hammered by taxes.
Yes, there's still time, everybody.
Amazing. All right. Well, Alexis, thank you for stopping in today. Just a few housekeeping notes as we finish up here. The first of which I have 3 points to make for you today. 3. All right. So if you're watching this podcast and you've just heard it with Alexis, of course, then you are either a business owner or you're thinking about becoming a business owner. And so I have a resource for you. I just created 2 scorecards. These scorecards will let you know whether or not you are ready to be an entrepreneur if you're thinking about becoming a business owner, because let's face it, not everyone's an entrepreneur. Nor should everyone be an entrepreneur. It's like saying that everyone should be a dentist, right? Nobody wants to be a dentist except for when you need a dentist. And then the second thing that a housekeeping note is that, remember, I have put together a local common sense community. So I formed what's called the Common Sense Council. It's a program for my business coaching clients and a recently formed Common Sense Mastermind. But the community in general I have is now up and running on Locals. If you go to commonsense.locals.com, if you're a regular listener to the show, you can support the show by joining that local sense, the Common Sense community on Locals, and you'll be able to chat with other like-minded, high net worth business owner listeners like yourself. You'll be able to engage in conversations. There will be a 24/7 chat. Who doesn't want to talk about the Common Sense show and what you have going on 24/7? I'm going to have extra information for you. I will do behind the scenes lives, Q&As about business strategy and business planning. And then I'm going to even start next year. I'm going to be having guests like Alexis come on and join that Common Sense Local, so we can have a little bit more content for you Common Sense Locals members. So commonsenseshow.locals.com. Join the community, get chatting, and look for those additional free resources. It has been an absolute pleasure to have you today, Alexis. Thank you for stopping by and schooling us today.
Thank you so much, Mike. I had a great time.
I appreciate it. All right. She's Alexis. I'm Micah. You're out of here. Talk to you later. That's the wrong thing. I've done this about 200 times. I meant to end the show. Here you go.